Hey everyone, this will be a brief review of one of my positions called Anterix. So before we begin, just like and subscribe so you can see future updates. This isn't a big position for me, but it's a kind of an interesting one. And if you sometimes invest in a company because you're betting on the jockey, not the horse, that's kind of what I did here. And I bought it. I think my average price is now around $40. It's down from there. I still haven't sold, and I still believe it's very underpriced. And I like the people, like the idea. I just wish the execution was better. So before I talk about Anterix, it's impossible to understand Anterix if without talking about Nextel, because as I said, this is a something that's you're betting on the jockey, not the horse. So once upon a time, there weren't a million different companies that you could buy cell service with. In the entire United States, in each city, there were only two companies that you could use, A or B. One of them was usually AT&T, and the other one was either Verizon or Nextel or one of the other ones. But in each city, you could only have two cell phone carriers because that's the way the FCC wanted it. So whether you were living in Peoria, Illinois, or New York City, each one could only have two carriers. One of them, as I said, ended up being AT&T, and the other one ended up being Nextel or Verizon in some cities, but each city could only have two carriers. Uh, then along comes a guy who was a attorney at the FCC, I believe, and he had read some obscure filing and figured out a way to use the existing law and create a third network, which, if you are thinking of opening a third network in Mattoon, Illinois, that's probably not that profitable, but in New York City or San Francisco, if there's only two, and then you have figured out a way to make a third, that's really profitable. So what did he do? Basically, the FCC had apportioned different parts of the spectrum for different purposes. And there was this one really crappy part of the spectrum that was apportioned for dispatchers. So before there was Uber, there was car services, and car services were different than a taxi in that you couldn't just flag one down. You had to call the company, and then the dispatcher would send a car to you. So that's what a car service was for those of you who are too young to remember. So for the dispatcher to call the car, which had a radio in their car, these operated on very crappy frequencies that were pretty low frequency, but they could travel pretty far distances. And car servers like these, and the amount that you paid for these frequencies wasn't a lot because there wasn't much else you could do with them. So somebody had figured a way through some rudimentary software to let the drivers call each other. So if you think about this a certain way, hold on one second here. So if you look at this picture, this is a hub and spoke. And if you think about the hub being the dispatcher, the way that the license worked before is all these spokes are different cars, and you would call the dispatcher, and the dispatcher can call any of the hubs, any of the spokes, and talk to them directly. So the hub could talk to the spokes, but the spokes couldn't talk to each other. And that's what this dispatch frequency was for. It was for this car service that would let the hub talk to the spokes, and somebody figured out a way to let the spokes talk to each other. And using some rudimentary software, they were able to allow the drivers to call each other for free and have chats and do whatever else they needed to do. And they were sued by, I believe it was AT&T, because they thought if you're going to use a traveling device to make a call, you should buy a cell phone from AT&T. They didn't like this. It went to the FCC, and the FCC said, this is for dispatchers. It has a walkie-talkie function. So they were fine with this. And what this lawyer, who eventually founded Nextel, figured out is these licenses are dirt cheap. I can go around and buy as much of these licenses as I want for not a lot of money. And I can have this software and develop a device where people can call each other using this really crappy bandwidth. And because the bandwidth is pretty low on in terms of megahertz, you don't need that many towers. I believe for New York City, you can do the entire city in like 11 towers. So it would be cheaper than a lot of the other cell phone companies, and you can do it for next to nothing because you can just run up and buy these cheap frequencies that car service companies use and pay them some money for it, but you're definitely paying less than the hundreds of millions that AT&T and the other provider were paying in New York or San Francisco or Houston. So that's what he did. He started buying up these frequencies and worked with Motorola to develop a phone where this would work. Initially, he didn't want a walkie-talkie in there, but because the FCC had said this is for dispatchers to use, and the frequency, you could use it, but it had to have a walkie-talkie on it. So he slapped a walkie-talkie on it, and that's why the Nextel phones have the walkie-talkie features, which made them incredibly popular with contractors. They love to use the walkie-talkie back and forth because at a time when people were charging you for minutes, you can just talk back and forth on the walkie-talkie. It didn't cost you anything. And if you just needed to send something really quick rather than text, you can just talk back and forth a little bit. It didn't cost you anything. And as I said, the didn't take a lot of towers to cover the whole city because of the frequency that this operated on. So that was Nextel. So they started Nextel. They were growing pretty quickly. They got some heavy hitter investors like Craig McCaw, who made a fortune in cable and telecom. Craig McCaw is an interesting person. There's a book called Money from Thin Air, which shows that kind of his trajectory. His dad had been an early cable pioneer and went bankrupt and lost everything and left his family one single cable franchise, which for some reason didn't fall into bankruptcy because of the way that it was structured legally. And he took that one cable franchise and grew that, and then bought other cable franchises and made a lot of money, and eventually got into telecom and invested in Nextel and sold a lot of his telecom companies and cable companies. I believe he sold the cable to Comcast. And but it's got a mention of a lot of people in the cell phone industry. It's a really interesting book. It's called Money from Thin Air. And one of my clients is mentioned in there, and he's not portrayed very well, but I think he's portrayed accurately. So that's all I'll say about that. I won't say who it was, but this guy was not a nice person. But if you look him up, he's a billionaire now. And but the book is mainly about Craig McCaw, not my client. So taking it from there. So they grew Nextel a lot and then eventually sold it to a cell company, which was, so eventually it was sold to Sprint, and the people who founded Nextel lived happily ever after, all rich. And Sprint really didn't do a lot with it. And it was a strange purchase because Nextel originally was called Fleet Call because of the connection with dispatchers, but eventually it was bought by Nextel, which was a strange purchase because this system that Nextel operated on, IDEN, was not compatible with what Sprint was using, which was a different system called CDMA, code division something something. and eventually it was just shut down and abandoned. And at some point, a few years ago, about 10 years ago, the founders of Nextel uh, wanted to sort of restart up Nextel. So Nextel had been hugely popular with contractors. As I said, they loved the walkie-talkie, and you don't see phones with that anymore. And they thought, if Sprint isn't going to do this, we can just buy up some frequency and do it again. And so they tried a version of that. So back to Anterix. So it went public in 2015, about $50 a share. At the time, it was called PVD Wireless. And at that time, the plan, as I said, was to sort of resurrect Nextel, and that didn't go anyplace. And then for the next many years, they were trying to pivot on that, and they had these licenses, and they wanted to use it for a different idea, which was private LTE networks. So your phone now probably has 4G. It's going up to 5G, but in the past, you probably had 3G or 4G. And this spectrum that they acquired, about 900 megahertz, so they had this spectrum, and they were petitioning the FCC, and this took several years, but they were trying to get the FCC to allow them to use this spectrum for something completely different, which would be a private LTE network. So what is a private network? Imagine having an internet that's not connected to the internet. That's the best way to explain it. So their plan was to develop this license and spectrum, and to get the FCC's approval to use this frequency. Give you this for video, and they give you this for audio. They give you this for telecom. You have to use it for what they give it to you for. You can't be creative with it. So they had to petition the FCC for an order, in order to allow them to try to use these frequencies to market to people, specifically utilities, as a private LTE network. So what advantages does that have? As I mentioned, this frequency is 900 megahertz. It's pretty low, so it's not good for 5G. The higher up you go with the megahertz, the more data you can use that for, but the towers have to be closer together. So if you've ever seen experiments where they test out the speed of 5G movies on all your devices, and it goes really fast, but you kind of have to be near the tower, because the further away you go, the slower it goes, and it doesn't travel very well. But these lower distances, you can't use as much data with them, but you can space them further apart. So this makes them terrible for something that uses a lot of data like 5G, but makes them great for a use case where you would want the towers as far apart as possible. And who would need towers as far apart as possible? So you would need fewer towers. That would be power companies, cell phone companies, things like that. So if you imagine there's a storm and a power line goes down, and you have sensors on the wires, you want them to be further apart, because if you're stringing lines through rural Wyoming, where there's a lot of wire traveling long distances and not a lot of people, you don't need a lot of data there, but you need to have the towers as far apart as possible, so that you don't have to pay for a lot of new towers. So that's why this is an ideal frequency for them to use. And you can have these Internet of Things sensors, so that if a power line goes down, or a telecom line goes down, or a cable wire goes down, not only do you know that something is down before the customer calls you to complain, you know exactly where it is. And the advantage that this has, because it's fast enough for 3G or 4G, if you're thinking about a high capacity power line, and then the power line drops and it causes a big wildfire like you have in California that caused billions of dollars of damages. With this, because of the speed at which it can transmit data back and forth, and if the line snaps, it can actually communicate with the base and turn off the power to the wire before the wire touches the ground, so that there's no risk of forest fires, and it's easy to repair because when you're having linemen repair a live wire that's down in a hurricane, it's very dangerous. But if you've already cut the power off to that, it's a lot safer. So can prevent forest fires, can prevent downtime, can prevent injuries to your workers. So there's all these advantages that it has for utilities. And they lobbied for years to get this to pass. And right about here is no, I think around here is when it went public. Not went public, when they got the FCC approval. uh Things started looking good. They actually, with several of the utility companies, formed something called the Utility Broadband Alliance, which was composed of Anterix and a couple of equipment providers and utility companies, so that they can all work together to develop standards for interoperability, standards for what for the equipment and things like that. And everybody wants this. The only problem with this uh, is, as I said, it's taken a lot to roll out, a lot of time to roll out. And the utilities seem to love this. Everyone thinks this is a great idea. And this actually benefits the utilities to license the spectrum from them rather than buy it, because state public utilities commissioners, they prefer you to lease things than buy them, because you're, as a utility, allowed a certain return on your capital. So if you buy things like new buildings and new equipment and telecom licenses, you've bought those and you're allowed a return on your capital. And if you lease them, you can finance a lot of that with debt, and then that keeps the return on your capital where the utilities like to see it, because if you're allowed a certain return on your capital, there's this concept in utilities regulation called gold-plated wires, where if you're guaranteed a certain return on your capital, you just get the most expensive things possible, and you pay it off with debt, and you're allowed to pass that on to your customers. So it wouldn't benefit the utility companies to try to buy this, because when they try to get reimbursement for what they've paid in for operations from the state PUCs, they probably wouldn't go for that. But since you're leasing this, just like you're leasing the computer equipment or leasing the trucks, they prefer that to you buying it. And there's actually tax advantages too, because if you lease equipment, you're allowed to write that off every year as a business expense, and if you buy it, you have to write that off over a longer time as a capex. So there's a lot of benefits for them to do business with Anterix instead of trying to buy capacity themselves. And by them working with utilities and the equipment providers, that helps everyone. And the use case is this specific frequency, because you can have the wires, the towers, as far apart as possible. It's sort of uniquely suited to this use case, and it seems like it was a no-brainer because of who the people running it were, these people who knocked it out of the park with Nextel. And I was not old enough to have invested in Nextel, and there's this idea that you only have to have one good idea to get rich, and these guys got very rich off of Nextel, so I thought I would follow them into Anterix. And I still think it's a great idea. I still think that the bandwidth that they have is underpriced. So there's a guy from a hedge fund called Owl Creek who has a very big position in this. And according to them, if you didn't do this and you just sold off the licenses to other people, it would be more than twice what this company was trading at. And they said that when this was at 40. So they think it's worth 80 just for the telecom licenses. And now it's trading at 30. And I'll link um, to the paper they put out on that. And whether they're right about that or not, it's a good metric, but it's sort of a little bit flawed because if the plan was to shut down Anterix and sell off the licenses and then you can get 2.5 times your money, then sure, great. But you're not selling off those licenses. You're using that as part of your business model. So you sort of have to value it not on what those licenses are worth, but on what the income you're going to bring in using those licenses is worth. And they had some pretty optimistic projections. And even though the utility companies speak highly of it, and the ones that signed up seem to be happy with it, utility companies move pretty slow, and so do state PUCs. And so the optimistic projections about how many of these contracts they would sign have sort of not come to fruition yet. And they have a lot of companies that they're negotiating with, but they still don't have as much contracts in place as they promised. So that's why I'm waiting for more contracts to add to this position. It's my price right now that it's about 40, and my cost basis is trading at 30. So um, I would add more to it if things improved, but I would like to see more contracts signed before I add to it at this price. Other good things about them, about 10% of their net worth is cash. So 569 is the market cap, and I believe they have about 70 million in cash, if I'm not mistaken, 57 million in cash. So current ratio 2.31. They're not going under anytime soon. They've got about 10% of their market cap just in cash, so they're not going to run out of cash. Almost no debt. It's pretty hard to go bankrupt if you don't owe anyone any money. So the only thing to think about is, well, if this did not pan out, they could sell off these licenses, and you would get more than the market cap of the company if they decided to abandon this. If they decide to go through with this, they think they can get a lot more for these licenses than you could from selling it off. So the only thing that needs to be done is to sort of pick up the pace in terms of getting contracts signed. But as I said, dealing with utilities and dealing with state PUCs, it's not the easiest thing in the world. There was a recent development last quarter. So I mentioned the hedge fund with the largest position in this is a firm called Owl Creek. And I guess they were clamoring to pick up the pace. And they announced, Anterix announced that they appointed one of the people from the fund to the board of directors. And he said he's going to help them with capital allocation and things like that. So I think that means maybe in the future we'll see some stock buybacks or other things to enhance shareholder values. So haven't been selling any, but I do like this company, and I would add more once I see some more contracts signed. And when they announce a contract signing, it can be pretty volatile. So at some point it was down, and they announced a contract, and it jumped up like 40 or 50%, and then came down again. So it's not something that it's something that's pretty volatile. So I don't mind speculative positions if they're not huge in my portfolio. And this one, I invested in the jockey, not the horse. And the verdict's still out on this. I would rather pay more for this after I know things are working out and everything is moving in the right direction. So for now, this is a hold for me. I don't think I'll buy more at these prices, even though it's lower than my cost basis, just because what I would like to see is more contracts signed. So if I see something like stock buybacks or more contracts being signed, I would love to buy more at this price. And if I saw a lot of contracts being signed, I would buy more even at a higher price. But for now, it's in my hold pile. And if things improve, I'll definitely add more. If things don't improve, I'll give it another year or two and then decide what to do with it from there. So I haven't seen anyone talk about this company, but it's in my portfolio, and I just thought I'd give a quick overview on it. If you bought it here, it would have been 1 billion. Now it's 569. Uh, and if you're anchoring to a certain price, as I said before, that's not a good idea. But they thought they could do, I believe, about 200 million by this point, and they've done about half that. If they were doing uh, 200 million in contracts, that would be great. And I'm sure I'd be willing to pay a lot more than $30 a share for this. But, as I said, the contract signings haven't been coming through as quick as I'd like. So there's a few more that I wanted to do, but I figured I'd knock this one out while I had the computer open. So if you like this, just like and subscribe, and you'll see updates when I do some further ones. For the next few, I think I might do St. Joe, which is a big holding for me, Grupo Televisa, which is a new one, and U-Haul, which I looked at and decided against. But anyway, like and subscribe, and if you have any suggestions of ones you'd like to see, just leave it below. Thanks.